All right, welcome back. We are going to cover the second part of calculating payroll taxes. We're in Chapter 12. I need you to jump forward to page 349 in your textbook. We've already covered that through your W-4 form, you fill out your W-4 form, you tell your employer how much should be taken out of your paycheck in federal income tax. They go look it up on the table. They pull it out depending on what you've earned and what you've told them your withholding allowance is. State income tax is going to be the same. We're not going to do that in accounting too, but it would be the same process. Okay, they would look up on a different kind of tax table, either married or single. They'd look at your earnings for this pay period. They then go find the allowance, match it up, say, oh, well, that's the amount they told us to take out of their paycheck. You have a say in how much of that is taken out of your paycheck. Get to the end of the year, fill out your 1040 tax form, figure out how much you should have paid the government, look back on your W-2 form, how much did you pay the government? If you got a little bit in return or you owe a little bit more, deal with that at the end of the year. Social Security and Medicare is a little different animal. They are just going to take these set percentages out of your paycheck and send them straight to the government for you. Okay, so if we're looking at our chart of accounts, we've now just added two more. We'll add a Social Security tax payable to our chart of accounts. Again, payable liability, credit balance account on the right side of the accounting equation, so increases on the right side of the T account, and a Medicare tax payable. Again, payable meaning liability. For the Social Security, the current tax rate is 6.2%. Now, you don't necessarily get a say in that 6.2%. That's just a certain amount that is taken from you, but it's not taken out of every single dollar. We look at the term here called tax base. Tax base means you're responsible for a part of that up into a certain amount. In 2019, our current tax base is $132,900. If you go look at page 349 in your textbook, again, this is an older textbook, it's $87,000. So that amount keeps going up. Well, what does that mean? Starting January 1, kind of hit the trip meter, all of our numbers are set to zero, and you start working. You earn a certain amount of money. Let's just say it's $1,000. Make math simple. January 15th, you've earned $1,000, but that's not what you take home. You go through, you fill out your W-4, they've pulled out a certain amount of federal income tax out of your paycheck. They've done the same thing in state income tax. The employer will look at your earnings and then calculate 6.2%, or if you've earned $1,000, they're going to take $62 from you. They're going to set it aside in this Social Security tax payable account, and they will eventually send it off to the government. End of January, do the same thing, and beginning of February, okay, February, March, April, May, all the way through. For some of us, that'll happen all year long, right? First paycheck all the way to the 24th paycheck, they'll take 6.2% out of your earnings in Social Security taxes. What if you are someone who earns more than that? Okay, they essentially, again, way oversimplifying it, $132,000 is kind of the only amount that you're subject to Social Security tax. After that, you've done your fair share. You don't have to pay Social Security if your earnings grow above $132,000 this year. So let's say Clem makes $150,000. January, February through, say, about, August or so, once I've gotten over that limit, that $132,000 in tax base, the rest of my paychecks that year, I'll notice I won't have any Social Security tax coming out. I've paid my fair share. That tax base has gone up in the year 2020 to $137,700. Okay? If I earn more than that, once I've earned past this $137,000 tax base, then I will not have Social Security tax taken out of my paycheck. I'm not the only one that has to pay Social Security tax. My employer pays the other half. Really, the tax rate is 12.4%, 6.2 coming out of my paycheck, 6.2 coming from my employer. So I am more expensive than the salary or the hourly rate of pay that I get. because my employer's got to kick in this 6.2% as well. We'll do a little bit more of that in Chapter 13. Finishing up the calculations here, we have Medicare taxes. Now, Medicare is 1.45%, but that's on all of my earnings. Now, you go be a payroll accountant, and there'll be more detail in there. Once you've earned a couple $100,000, they may double that rate. Again, that's beyond what I need you to worry about right now. What I need you to worry about right now is that of every dollar you earn, 1.5 pennies goes to Medicare. So if I earn $1,000 times 0.0145, every pay period they're taking out $14.50. Doesn't matter whether I earn $10,000 a year, $100,000 a year, or $1 million this year. Okay, 1.45% is coming out of every dollar I earn on Medicare. I have a limit or a tax base for my Social Security. The other key idea to understand is this resets every year. So January 1, 2020, we start over. I got to pay Social Security. I got to pay Medicare. If I earn more than the tax base, then they stop for that year. Then the next year, 2021, again, start over. Clem's still got to pay some Social Security taxes.